Hello, ACC 101 students. In this video, we are going to look at Chapter 6, Financial Statements, more specifically, Chapter 6, Homework, Problem number 2. So now we are taking a look at Chapter 6, Homework, Problem number 2. So in this problem, you're going to do the three first. So remember that income statement is revenue minus expenses, gives us either a net income or a net loss, depending if it was positive or negative. Okay, so looking at McGaffin's Repairs, I have an income statement for the month ended January 31st. So like I said, first goes revenue. So for this company, it's repair fees that are the revenue. So I have $5,000. You will need to scroll up and use the blue chart to find the revenue. Then you're going to list all of the expenses. Okay. We put them, I see wages, advertising, rent, supplies, phone, insurance, gas and oil, then our depreciation expense for that delivery equipment and our miscellaneous expense. So we put all those in, then we add them up, and that's where you see on my screen a $4,143. Now, income statement, revenue minus expenses, so $5,000 minus $4,143 gives us a net income, because it's a positive number, of $857. Let's take a look at the statement of owner's equity for McGaffin's Repairs. So this is for the month ended January 31st. This is not the first month that the business has been operating. So there is a prior capital for this business. You'll use the blue chart up at the top to find that number. So for me, his beginning capital was $7,608. Then we add in the income for January, the number that we just calculated from the income statement on the previous slide. So that was $857. And then we're going to subtract withdrawals for January. So less means to subtract. Withdrawals is his drawing account. So you're going to go up to that blue box at the top and you're going to find the drawing account and you're going to plug that number in. Where I have 1,100, you'll plug in your number. Okay, so we will end up with a negative number. So he only had $857 and he took out $1,100. So he had a decrease in capital for this month of $243. So you're going to put in minus 243. Now, to figure out what his ending capital is for the month of January, you're going to take your beginning capital of $7,608. You're going to subtract $243, or you're going to subtract your decrease in capital, and that's going to give you your ending capital amount for the month. Okay, the final thing we're going to look at for this video is the balance sheet from McGaffin's Repairs. So on the balance sheet, you guys can see on the slide, I have assets listed first. So you're going to go back up to your blue box and you're going to find cash, accounts receivable, supplies, and prepaid insurance. You're going to plug all those amounts into these boxes and then you're going to add them up. So you see the 5,855. That's the total of those assets listed at the top. Then you're going to look at property, plant, and equipment. So my delivery equipment minus, less means minus, my accumulated depreciation. So minus $3,150 minus $60. That leaves me with $3,090. So I'm going to add both of those asset numbers together. 5,855 plus $3,090 gives me $8,945. Okay. Then we're going to move to liabilities. I have accounts payable and I have wages payable. So I'm going to put those numbers in. Remember, those numbers come from the blue chart up at the top. Then I'm going to add them together and I'm going to put them over. You can see on the right side, I have a number of $1,580. Then I'm going to move to owner's equity. And where does that number come from? So it comes from the previous slide that we just did, the statement of owner's equity, that last number at the bottom. That's the number you're going to plug in here. So it won't be in the blue box. It'll be back in number 2 in that statement of owner's equity. That final number you calculate, goes in the box here for the balance sheet. Okay, so then I'm going to add my liabilities plus my owner's equity. So 1580 plus 7365. That gives me total liabilities and owner's equity of 8,945. And if you remember from the very beginning, chapter 2, assets equals liabilities plus owner's equity.